welcome back to the C Morning Show. We're just past the halfway point of our program, which brings us to our first discussion of the day, which is finance related. Karina, do you do online shopping? I shouldn't even have to ask this.
Guilty. You do it too.
I do, but do you ever use that like pay later or any kind of installments? Do you do anything like that?
Yeah, 'cause sometimes it goes automatic.
You get
some
the default
platforms,
setting.
Yes.
Right. I've done it by accident once too, but I do use installments sometimes if I'm making a big purchase.
Exactly, when it's a big purchase,
A laptop or something like that. Now, shopping online has been made easier with Pay Later. Pay Later has a similar concept to credit cards, but with supposedly simplified requirements. Now, this allows customers to divide payments into specified installments rather than paying the entire amount when you purchase an item.
No, that's right. However, this ease of payment can still lead to various problems. Unmanageable debt has pushed some shoppers to accumulate more debt from other lending services online.
So the main question is, when is the right time for you to use these online loans or Pay Later, any of these credit services? To find out, we're now going to connect with Personal Finance Enthusiast, Mas Dani Rachmat. Good morning, Mas Dani. Thank you for joining us today.
Morning, Mas Dani.
Hi, good morning, Paul. Good morning, Karina.
So, Mas Dani, can you explain, first of all, before we dive deep into this, what's the difference between an online loan or Pay Later or credit without collateral or pre-approved credit? And what separates this from using what we know as conventional credit cards? Is it better? Is it worse? Is it the same?
Yeah, actually, the thing, they're all debt, they're all loan. But Pay Later usually already has underlying transaction for the loan, such as when you shop in marketing system app. While online consumer loan or payday loan from financial technology companies solely based on application and data from their smartphones.
Okay.
Without any further checking, without any collateral. This is for your transaction. While for the unsecured loan from bank, KTA, usually based on bank payroll.
Mas Dani, are you there? We're kind of losing your connection a little bit. Sorry.
Can you hear me?
Yes.
I still can. Yeah.
Okay, go ahead.
Yeah. For the unsecured loan from the bank KTA is usually based on bank payroll system of the debtor with the bank and also their transaction in the bank. So usually it will take more time to approve for the unsecured loan from the bank compared to online consumer loan or payday loan that you can get instantly. So that is the basic concept of the loan.
Okay, so we missed what you said a little bit in the earlier. I don't know if you mentioned anything about interest rates, but what I do know is that can interest rates be higher when it comes to these kind of pre-approved loans, especially if you don't need any sort of bank checks or credit checks?
Yes, for the interest rate, the highest, of course, when it comes to debt, the easier you get the loan, it will charge you the higher interest rate. So out of the three, Pay Later and then unsecured loan from bank or pre-approved loan and also online loan, payday loan, the highest will be the payday loan, the online unsecured loan from the financial technology companies. And the lowest must be the unsecured loan from the bank.
Okay.
Because they will have more data to analyze before they grant you the loan.
Makes sense.
Right.
Where does credit cards fit in? Because back in the day, credit cards were the highest interest rates out of all. Where does it fit in now?
Compared to the online loan and also the Pay Later, actually credit card is nowadays seems like the lowest option of the available loans.
Oh.
Yes,
Wow.
because to get a credit card, you will need history with the bank and so many checking for the credit card.
Yes,
Right?
good point.
It's a more complicated process to get a credit card.
Yes.
Now, Ms. Dani, I think with that being said, for the younger generations like us, and especially maybe kids now who are still in high school or studying, it's a lot easier for them to have these pay later and similar services, right? But
Yes.
regarding everything that you have mentioned, would you recommend others to use any of the services you have just mentioned?
If the sole purpose is to finance your expenses, your daily expenses, your your living costs, I really suggest that you never consider to use them because the interest rate is very high. And the solution to that, actually to finance your living expenses, is to live within your means and or increase your income. But then if you have any productive business that you already know that the profit margin is higher than those interest rates, then you can use them.
Yeah, it's always a good rule of thumb to just use the money that you have as opposed to money that you don't have. But again, that's easier said than done. A lot of people try to live within their means. However, emergencies sometimes do come up, whether it's medical bills or unforeseen circumstances. So what would you say if somebody was thinking of using an online loan app for emergency funds? Because if it's an emergency fund, it's not something that you're expecting. But if you're paying, if you have to pay interest when you have to repay these loans, you might have difficulty doing so. But because again, this is not something that you were accounted for.
Yes, I think that is the biggest misconception here, and that is what those loan providers use to market their products. Use this loan for your emergency needs. While for emergency needs, those kind that you mentioned, actually, it will be better if you prepare your emergency fund in hand, ready in safe and stable financial instruments. 3 to 12 months of your living expenses. So that way, that will save you from the real emergency situation. When you take out that loan without any any planning, any backup fund that you have to pay them, you will be charged with a very high interest, and it will cost you the additional living expenses that you actually don't use because when you pay interest. You only use the loan that you take out, right? While for interest, you still have to pay. So, no, don't use that loan for the emergency purposes.
That's right.
Instead, prepare the emergency fund and buy insurance.
Actually, you brought up a very good point. I had this experience once. The one time I really had to resort to emergency funds, which was quite a large amount, was for a hospital bill that I did not expect. And at the time, I did not have insurance. And you're absolutely right with your last statement, Mas Dani. Ever since that point on, this was about 6 years ago, I've taken out life insurance, I've taken out health insurance, because that is what's going to save you from having to dip into funds that you may not have. Because and obviously the best thing is to put away savings, but on your way to putting away savings, get some insurance, keep yourself covered from those rainy days.
And they're usually the bigger bills, right?
Indeed.
Ones. Now, Mas Dani, you previously mentioned that we should avoid using online loans or other credit services, especially if it's for our day-to-day needs. Now, how about if we shift our focus a little and say I had a snack or cake business, and say this month I've received higher orders than usual. Now, instead of getting a, say, 50 million rupiah loan that I would need to get on for this month from the bank, would you recommend still the use of pay later that provides a smaller limit of, say, like 10 or 15 million rupiah? Or should I just still avoid using pay later and online services altogether?
You mean for your, if you had a business and you want to pay for your expenses a little bit?
Because I mean, rather than getting into the logistics of banks and stuff, as you said, like probably same as credit cards, like they'd just be a lot more complicated. Like, would this be a good reason, an excuse to still use pay later, or should we just completely ignore it altogether?
Yes, that would be a very, very good reason to use the pay later and this available online loans, because the bank loan process is very long and very tiring sometimes. so that using pay later and then online loan, it will be faster and it will support your business in a more direct way. Because I had experience with my friends and followers that they mentioned that rather than go bank, they choose to use pay later because when they get like 15% margin in their business and then they have to pay like 10% in the pay later and also unsecured loan, they still get 5% profit with faster timing, and it will boost their their money turnover. So that the smaller limit, but then they can they can push their business in a faster way rather than waiting for the loan from the, because loan from the bank will require you to submit the financial statement and then collateral and everything.
Yeah, and that makes sense because, again, we're talking about this example that Karina gave. If she has already received this order, like you're going to get this money already.
You know you can pay it off. Yeah.
You've gotten a big order, but you just need this money really fast, and you just need to buy some supplies and expenses, and then after that you can pay it back right away.
Yeah.
And again, when it comes to pay later, make sure you pay later.
Solid reason.
Yeah, exactly. Make sure you pay later and not latest, because you'll get charged with like a late fee as well, right?
Yeah.
Definitely. So I've also got, I always get calls, Mas Dani, almost on a daily basis. A lot of times I have to avoid these calls. For people offering loans to consolidate my other loans. So basically a loan to basically put together all my other loans.
So you're like covering, digging a hole and covering
another. And they always say, it's a better, you only have to make like one payment a month, or it's going to be a lower interest rate. It always, I've never done it before, obviously, but is that something that can be of benefit as well, or is this just another gimmick?
Actually, I never found that that kind of services provide cheaper cost to you to consolidate your loan. But if when you check everything and the interest rate and then the cost, the hidden cost that they didn't mention actually lower, then that is a good opportunity. But I never suggest that someone repay their existing loan using another loan, because there will be administration charge and then whatever charges that they maybe not to mention in the initial offering.
Okay.
So depend on the detail of the loan that they offer, I think.
Right.
Still, you have to dig deep into any kind of offering.
Right. Now, Mas Dani, I feel like sometimes we're already so careful, but some of us might still be a little unfortunate.
Asking for a friend?
To be trapped in debt by online lenders. You know, some of us may not be aware of how this works and find ourselves trapped in this. What's your take on this situation? What do you think we can do to sort of prevent this from happening?
Yeah, if you already deep in debt and you cannot pay, the very first step that you have to take is that never to take any other loan, even to repay the previous loan.
Okay.
So that is the first step. And then the next one is that you can come, if this is the legit online loan platform registered in OJK, you can always come to the platform and then say that I cannot repay your loan with the current payment terms. So that can we talk something that we can work out how to repay this loan using another scheme?
Okay.
Maybe you can make it like in the longer repayment. Yes, you can always restructure by coming to the online platform provider, and you have to ask that. Yeah. Because if you don't do that, they will never know that you have any difficulties paying your loan. But stop adding more loan to your report.
Right.
Yeah, it becomes like at least it's a win-win situation for both parties, because for the creditor, if you default, then they don't get any of their money back, and you get bad credit, and you end up defaulting as well. It's a lose-lose situation. But at least if you can discuss new payment terms, at least the creditor will get their money back, even though maybe a little bit later or in smaller increments, and you as well will have a better chance of paying out your loan. So I want to ask you, Mas Dani, you mentioned about living within your means. What are some of the tips that you have that perhaps people should follow as rules of thumb as to be able to live within their means so they're not, quote unquote, trapped under these debts?
Actually, they're very easy. You only need to find your budget, the most convenient budget for you, and then stick to that budget. So that for me, it is 20, 30, and 50. 20% for investment, 30% for whatever I want, and then 50% for my living needs. So that after I receive my salary, I will use the 20% directly, and then 50% to pay off my bills, and then 30% if I want to do anything, whatever. So that do not use the excuses like self-reward and then self-love over everything to spend more than what you have. So that is it's actually very, very easy and very simple.
50, 30, 20 rule. So Karina, make sure it's not 50%, to do whatever you want
Yes,
money,
Dad.
and then 30% and 20% for your expenses. So when you say 20% investment, it's like your savings, money that you should be putting away for a rainy
Yes.
day and just in case of emergency and things like
Right.
that. Good rule to follow.
Yes.
I've heard this before. Again, easier said than done, so we hope that you're able to somewhat stick to these rules, because the last thing you want to do is get trapped under these debts and
Yes,
then
sir.
end up having creditors calling you all the time. Mas Dani, thank you so much for your time.
Thank you, Mas Dani.
We really appreciate
Thank you
this,
for having me. Thank you.
some of your tips and
Very
tricks as
insightful.
well. Really appreciate it. Have yourself a great weekend.
Happy weekend.